Hello again. We're looking at Q1 earnings today, a quarter where the COVID pandemic fight saw vaccines stop starting everywhere. Economies wavering between hope and despair. In short, drama. Let's start though with a quick survey for the day. It's bizarre, really, with politics really becoming a hot issue. China warning about Taiwan, Russia massing troops in Ukraine, and so forth. But for now, the effect on finance is not so dramatic. The Dow yesterday took a bit of a plunker as Johnson & Johnson said they were delaying their vaccine rollout on blood clot concerns. Otherwise, the S&P and Nasdaq seem to be chirpy as bond yields around the world ease somewhat. Consumer inflation is slightly up from March, with real earnings improving by 0.1% month on month after February's 1.2% contraction. European indices are mainly up, but calmly, after yesterday's data saw a 7.8% contraction in the UK's GDP year on year, 4.35 in construction, and a £4 billion widening of that nation's trade deficit. On the bright side, industrial production is up 1% month on month and manufacturing 1.3. In other European data, German economic sentiment took a 6-point dive in April, and the half and 1 year bonds in Spain auctioned off at a slightly higher yield than the month before. Asian equities are mainly up this morning, except Taiwan's weighted index just below the zero mark, and the Nikkei down 0.33% as machinery orders in Japan surprisingly contract 8.5% month on month. That's double January's drop. The Aussie is slightly up as Westpac reveals a 6.2% increase in consumer sentiment for April. And once shooting past the 60K level this morning finds Bitcoin still rising at 64. This as Nasdaq yesterday revealed Coinbase's share price at $250 per slip. That's a $256 billion valuation for the company. Not so bad. Oil is up in leaps and bounds after yesterday's API drawdown, 3.6 million barrels for the second weekly surprise in a row. Also yesterday, OPEC raised its demand projection slightly. Quarterly earnings. FactSet expects them to grow about 24% year on year across the board, and that's not at all bad, although sales will be only up 6% if we're lucky. The problem here has been mainly supply chains rather than actually a really healthy demand. Relatively high oil prices might hurt profit margins, and the biggest problem just maybe really high expectations, because as we all know, the main movement after an earnings announcement is on the surprise. So what have we got? JP Morgan will be reporting before the New York Open with earnings estimates of $3.05. That's much better than last year's 78 cents, but less than the previous quarter's $3.79. They've surprised to the upside 3 times out of 4, so let's hope continued QA isn't hurting them too much. Wells Fargo is more into retail, so I doubt there's much change here. Expectations are for a better EPS than last quarter's on revenues that are actually down from $17.9 billion in Q4 to 17.6 in Q1. Again, we're looking at a company that's relatively consistent in surprising upwards in earnings, but downwards in revenues 3 times out of 4 in the past year. With Goldman Sachs, we're looking at investment banking mainly. The street is expecting a 3-fold rise in earnings year on year, and Sachs is looking at a 3-cent drop in earnings on the previous quarter to $9.79. Seeking Alpha is a bit more optimistic with 1019, all-in revenues of $12.66 billion, up $1 billion from last year's Q4. Goldman is a nearly consistent surprise maker to the upside, especially in revenues. In retail, we have Bed Bath & Beyond and Tesco coming in as we speak. Let's see if we've got their results in yet. It should be in just about now. No, we do not. Well, that's it for today. We're signing off. Bye till tomorrow.